Good morning. Can everyone hear me?
Sound good?
Good morning, good morning. How we going? How we going? How we going?
Let's see. How's everyone doing? Aiden, Arish, Axel, Craig, Patrick, John, Sarah. Good to see everyone this morning.
Happy Sunday. Today is
for...
January 21st. We'll give a couple minutes. We will get into it. Hope everyone had a good week.
What a week.
New setup. Yes, new setup. I know the background probably looks a little different. Not in my usual, or where you're used to me being. A little different, change of scenery.
Anyone do anything fun this weekend?
I've been working out and eating. Today's day 14 of my 75 hard.
14, all right.
14.
2 weeks in.
It's been going good. It's funny. I definitely have to think that you're going to go all 75 days of full motivation, being able to do everything. There are days that are easy and there are days that are hard, but if there's one thing that I have found out, it is that success is not owned, it is rented, and rent is due every day. So, every single day, doesn't matter what I feel like, doesn't matter how tired I am. I'm up at 5:30 a.m. I'm in the gym by 6, and I knock it out. And, the hardest part for me has been eating because my goal is to gain weight and gain muscle. The hardest part by far is not the cold plunge. It's not the 2 workouts a day. It's none of that stuff. It is by far the eating, making sure that I'm always in a caloric surplus. It's hard because that in itself, when you eat a lot, your body's constantly digesting. So your body's constantly in kind of tired mode. So just pushing through all that. But I will say that this past week, my energy levels have increased. The first week, my energy levels were either really high or really low, and that was kind of going up and down throughout the entire week. This week, I found there were a couple days where I didn't even really need caffeine. My energy level wasn't too high, but it also wasn't too low. It was kind of stayed in the middle. So I'm hoping this week, I'll have a little bit more energy for a longer sustained period of time. Trying to get those energy levels higher without having to use caffeine. That's one of my main goals, is because I've kind of been using caffeine as a crutch to get me through a lot of that stuff. But it's been good. It's been really, really good. I've been able to see results both mentally and physically. Not a lot of results, but tiny results, kind of getting in there. But we still got a lot more to go. We still got a lot more days to go. So I will keep you all updated. And I'm going to post pictures of my transformation from day 1. Then I'm going to do day 35, and then I'll show you guys day 75, so you guys can see my transformation physically as well. So I will keep you guys in touch.
Couple more folks joining us. Manuel, good morning. Mauricio, good morning.
I will show you guys my book too that I'm reading right now. It is called Thinking Fast and Slow by Daniel Kahneman. And it's the idea of the brain and your mind has 2 systems of thinking. The first system is fast, intuitive, and emotional. It's those things where you don't even think about it, right? When you look at someone, you can automatically tell if they're happy or sad or they're angry. It's almost like that second nature intuition. And then the second system is a slower, more deliberate, and more logical approach to thinking. And it is a hard read, but I've gotten a lot out of it so far. I'm only on the 3rd chapter, but it is very cool when you really start to, a lot of times you don't really think about how you think, right? And you don't really understand how well your intuition can kind of play towards your decision making and stuff like that. So really kind of taking a step back and understanding the way your intuition works and how, when you understand your intuition, right? We use intuition in the markets, right? When we see things that have happened time and time again, we start to get this thing called intuition. So really just taking a deep dive into that. It's been a cool read so far. We can go ahead and get into it.
All right. Franklin,
alrighty.
Good to see you this morning.
Let's go ahead and get into it. News this week. So we do not have any news tomorrow. On Tuesday, it's very light. At 10 a.m., we have a manufacturing index, medium impact. On Wednesday, we have 2 high impact newses right after equities open. At 9:45, you have a flash manufacturing PMI on top of a flash services PMI. Thursday, at 8:30, so pre-equities, you've got 2 red folders and 3 medium impact folders. So you've got advanced GDP on quarterly basis and unemployment claims releasing at 8:30. And then on the medium impact news side of things, you've got advanced GDP price index, durable goods orders, and then just regular durable goods orders. And then at 10 o'clock, you do have new home sales. So that's for Thursday. And then Friday at 8:30 in pre-equity open, you have core PCE price index monthly. And then you have 10 a.m. pending home sales. So that is really it for news. Nothing crazy this week with regards to news, but you do have stuff occurring kind of in the back half of the week. Not a whole lot going on Monday and Tuesday. Just keep an eye open there. Any questions, comments, or concerns before we go ahead and get into the DXY? You guys are always pretty good there. I will stop sharing this and I will go into the dollar. Alrighty. Dollar.
One clarification question.
Yes.
While screen is loading up. If Monday and Tuesday don't have any high impact news, is there like a particular kind of a weekly profile that usually sets up, which you may have seen from your experience?
Yes. I would usually, when I see stuff like that, I usually see Wednesday making the high or the low of the week. It usually does a little bit of consolidation on Monday and Tuesday. You really will have kind of low range days on Monday and Tuesday. And so I would use Wednesday to look to see how we manipulate Monday and or Tuesday's highs and lows and see how Wednesday trades above or below those, right? So if we have small range days on Monday and Tuesday, understand that on Wednesday, if we trade above or below those, start to see how we might manipulate that. I've seen through my studies and my experience, Wednesday kind of being that key day. And you might not get a big range on Wednesday, but you might see the follow through on Thursday, if not Friday. But Wednesday usually makes that high and low. It might not be a large range day, but it usually will put in that high or low. And then Thursday and Friday will follow through with it.
Got it. Yep. Thanks.
You're welcome. All right. So dollar on the monthly. We're still kind of hanging where we've been. There has not been a whole lot of movement on the monthly. There's really not a whole lot really to say, rather than we did trade up into this volume imbalance, but still we've got 10 more days for the month. So there's really nothing to kind of say here. When you go down into a weekly, a couple things to note. We did close above this SIBI and we are in a premium. So I'm curious to see how this plays. Now, this is a weird week for dollar because on the weekly, we closed above this SIBI and we have this BISI below us, but we closed above on the weekly. So I'm curious to see if this is used as inversion. But when you go on a daily, and I'm really focused on the daily right now because you can see the daily has respected all of the premium arrays, right? We're still inside the CIBI and we did not close above it. So with regards to all this inefficient price here, I still want to see price pull down in here. So I'm curious to see that on a daily, Monday and Tuesday, do we start to pull down in here? And if we stay below this CIBI, I'd like to see price go lower back into this equilibrium and see how we play, right? From this high to this low, how does price play when we get back to this equilibrium? Because if we do decide to get back below it, right, do we use it as resistance and go lower? Or are we going lower just to fill this price and actually use this equilibrium as support to then come back through here and make our way towards buy side? So there's a couple areas that I'm looking at. I don't really have a set bias yet because of how we closed on the daily with regards to the CIBI. Notice how we have buy side offered candle closure through this volume imbalance, but we do not have sell side. So my main idea going into this weekend, the only thing that I'm kind of really eyeing on dollar is how we pull back. I want price to pull back into this area and then show me how we respond to the lower half of the CIBI and this volume imbalance. Because do we want to fill it and still respect it and get back in here and use this as support, right? Because this is still open for grabs, right? Something like this. Or do we want to actually just come back below it, fill it, and then continue going lower, right? Because we do have imbalances down here that still need to be filled. With the way equities are looking right now, I am bullish on equities. So that means for whatever the reason, I think dollar should go lower if we're not going to remain in a mixed market. You can see obviously at the end of the week, equities ended up going higher and dollar went higher prior to them going higher. So you kind of had a little bit of a mixed market, but then dollar just stayed kind of where it was at. And you can see we're kind of on a turning point. So I'm curious to see if we hold this high on dollar and start to pull lower into this inefficient area. And then once we pull back down into here, is it a matter of us going through it, right? Do we displace through it, or do we just kind of use it as support and go higher? With the way equities look, I see us actually going lower. So my eyes would potentially look to see, even though we did close above this CIBI, if you're looking at this up closure as an order block, you can see how we did respect the mean threshold of this, right? Very sensitive to the mean threshold of this. So we still can't go lower, because if you're looking at this whole set and sequence of structure, right? We had a low, a high, a lower low. And in theory, right, all we're doing is making that lower high right here potentially to potentially make a lower low. If we're following structure sequence, that's what we kind of have to expect until obviously price invalidates that and goes lower. So I'm not holding too much weight on the fact that we did close above this weekly CIBI just because of the way the daily looks, right? We still look like we could potentially go lower with regards to what's sitting under us on dollar. And if you're looking at it from a power of 3 stance, right, you've got accumulation, potential manipulation, and now potential distribution going lower. So that's something that I'm looking out for here, right? The only reason why I am starting to lean a little bit more towards the downside is just because of the way equities look. I have to keep that in mind, right? I think aside from that, that's really it for me on dollar. You can just see we've got volume imbalance in here on the 12-hour, same thing here. Volume imbalance here. You also have a breaker in here, right? So you have a high, a low, a higher high, right? It doesn't look like it's a higher high, but if you look, the high here comes in at 104.233, and the high here comes in at 104.263. So it did make a higher high. So if you're utilizing this up closure, or this down closure, excuse me, as a breaker, you can see how we have been respecting that. You can see how we respected the consequent encroachment of that, which was actually also the mean threshold of this weekly order block. So we still have a breaker that we're using here. And you can see all of these lows in here, right? You've got some equal lows in here as sell side and some inefficient price that has yet to be delivered in here. So curious to see if we can hold that and go lower. If you go into a 4-hour, Really same thing here, right? You've got a lot of this imbalance in here and still very clean lows in here. So I'm curious to see if we want to continue to start to go in here. I would also be looking to see if we do want to hold this high, right? Potentially using this as an order block. I'll change this really quick. Hold on. All right, we've got that as a potential order block. So if we do start to displace, right, do we come in here and start to go lower? That's something that I'll potentially be looking for. And then you do have a little tiny BISI in here too. So I'll be watching candle closure and to see if we want to invalidate that. And then if we want to go below it, right, do we start to use that as resistance and go lower? So that's something to watch. So I am a little bit more bearish this week on dollar just with regards to going into this area in here. And then once we get in here, really going to start focusing in on candle closure and how we're respecting the bottom half of this overall CIBI. Any questions, comments, or concerns on dollar? Anything here before I pass it to Henry? It's really about it for right now. Still in this range. Just note that we are at a premium from this high to this low. Other than that, I think that's it. All right, Henry, all you.
All right. Indices. Okay, so starting on the monthly charts here, you can see ES and NASDAQ have both delivered to the buy side like we've been talking about out of that weekly BIST we had below. So continuing to press higher, working through old highs and deliver to buy stops, liquidity resting above the previous monthly high and prior week's high as well. Just to note on the monthly chart now, there are still 10 days left in the month, but note that ES is potentially forming another BIST below inefficiency. NASDAQ here has already done an immediate rebalance there, just leaving this lower BIST behind. So not looking to these areas right now, but it's important to be aware of what inefficiencies exist below price as we continue to move higher. I'm going to hone in on ES now, and then we'll cover NASDAQ just as we get into the lower time frames here. ES dropping down to a weekly. You can see that we worked very nicely off the consequent encroachment of the weekly BIST right here, trading up toward the buy side. Yes, we had an early drop down at the beginning of last week, but note how the wick is trading into last down close candle right here, but not closing below the mean threshold of it. And then we continue to work up toward the buy side right there. Nothing much to note here as we go forward on the weekly chart. One thing though is if price is going to continue to press higher off here, the most ideal situation, as I would see it, is that a new BIST gets formed. So the most ideal situation would be that when price opens next week, it does not trade all the way down to this candle's high. Because if it did, there would be an inefficiency left in here. And so we'd be seeing new displacement on the weekly chart after trading into an old inefficiency. It can trade into this high and continue to trade higher. But the best scenario to see price really continue to extend higher would be to create that new inefficiency here and push off of there. Dropping down into a daily chart, you can see when we did have that earlier drop in the week, we're just coming here into this daily BIST. See how the candle bodies respected it nicely. We did wick through here, but closing above it. And then using the consequent encroachment of it right here on Thursday. I put that midline on, and see how we trade right off the midpoint right there and then start moving higher. Note as well when we're seeing that this retracement here, if you put your fib on this low to this high and draw your midpoint, you get equilibrium right around here. I'll put it on real quick so you can see. 4,770. So see how the candle bodies drop back down into a discount, but the bodies close right there at equilibrium, so not closing all the way down here. You can see that really nice response off of a discount and then continuing to work up toward the buy side up here. So just like we're seeing on the weekly chart, ideally we create a new BISI on the daily here as well. We do have one here, but I'd like to see one created in this area as well. So what that would mean is that Monday's candle trades and consolidates and does not trade all the way down to this candle's high. Okay, then we would have a new inefficiency here, and then that can be used on Tuesday or Wednesday to trade back into it. So if Monday does something like this, and Tuesday or Wednesday can trade into the inefficiency and then trade higher. Okay. Okay, that's pretty much it for the daily chart. As far as where we could go to off of here, there's a couple things you can do. For one, we can look to the continuous chart and see what exists in terms of liquidity and inefficiencies from far back before we can see on this chart. See how on the current monthly contract, we can only see back to January of 2022. If you look to your continuous one, then you'll be able to see price data further back. But initially, what we can do on a daily is take swing projections. So if you're looking at this as your fulcrum point, because this was the full dealing range before we take the buy side up here, so you can take your fib and put it on this low all the way up to this high here, and then put on projections. And you can do your extensions. Let's see, Emmanuel will be utilizing the previous BISI on the daily as a breakaway gap. Yeah, so while this could trade down here, I would like to see a new inefficiency created and just for that one to be used. And it'd be great if it would be sort of aligned with the previous weekly high here, if we are going to trade back into that high. So I wouldn't really want price to come back down here. It could and continue higher, but that's not ideal. In terms of projections, you can take this as your fulcrum point. So projecting this low to this high, and then you get your half standard deviation right there, and then your first full standard deviation up here. So you can look to 4,911.25 and 4,981 as potential next targets for price to trade to. And then you can take these projections as well when you're trying to find other areas to take partials and just split them. Right? So if this is your expected area for price to trade to, then you can take the midpoint there as well. And then same thing for after trading through this one, you can look at it like that as well, 49.45. Okay. That's it for here. I'll go into a continuous chart real quick so we can see what exists there. Drop back to a monthly first. And you can see we've traded above this swing point right here. So buy side being purged right there. And then all that would remain in terms of buy side above here is this old high. So if ES is really going to get rocking here and trade higher, then you have buy side resting above here. On a weekly chart, same thing, not a whole lot above this high until buy side. So I'd just be watching for above there. And then on the daily, let's take a look back here. You have an old high before that. So this can be a potential price target here, 49.59.5. And then you have the remainder of the inefficiency that exists there as well. So you have this BISI here, or SIBI, excuse me, from that low to this high. So right there, and note how it was traded partially into already. So we can refine that. And then you could quarter this as well. So if you put on a midline like that, then draw this out. And there's some more targets that you can reach for as well, if this is really going to get going, of course. If we don't see that new displacement on the weekly, So if price on the weekly does come all the way back down into this high here, and even more so if it trades back down into this inefficiency and closes below the mean threshold of this down close candle here, then we can return back into sell side. And if we got back below the sell side here and saw the new displacement there on the daily, that's when I would expect the monthly to trade. Okay. Getting new displacement on the weekly chart, since we traded into this inefficiency here, getting new displacement here, meaning a new BIS is created just like this one, that would be a strong indication that we're likely to continue working higher. If you don't get the new displacement, then it provides the opportunity for price to return back into the range. Any questions here on ES?
Yes, Henry, good morning. I have a quick question. So if we take the prior 3 weeks low, which is inside of that fair value gap, then
Yep.
that's invalidation for this week. Is that correct? Invalidation for
Invalidation
for not going higher.
I think my playing 3 years.
I'm saying that if we take the prior week, the 3 prior week lows, that will say that will imply that it's more bearish than bullish, right? That will be your invalidation.
Hang on, I got it. One second. And I'll answer. My audio is playing it out loud through your speaker, I think. Trading back down through this low would not be ideal in terms of price continuing to trade higher. What's preferred is that we create new displacement, a new inefficiency in here, or for at the minimum for price to trade to this high and then continue to work higher off of that. Trading back down below this low at this point, now that buy side has been purged, would be a more likely indication to me that price is going to trade to the lower end of the inefficiency and then potentially down to the monthly inefficiency below. It could trade back into this area and then continue to work higher. But if you're seeing it trade below this low and get new displacement on something like a daily chart, like if you see a SIBI created while price trades through this low, then I would start looking for this monthly business down here. Does that answer your question, Mauricio?
Yes, thank you.
Okay, cool. Okay, Arish, want to see the old highs hold for us to go higher. The old highs. You're referring to right here, Arish? Yeah, I mean, we could come back through this high and trade into the previous week high and even into this wick right here and still continue to trade higher. But most ideal would be that we just create a new BISI in here and this next week starts to move higher off of that. Alan says, should we look at ES1 for targets if we're bullish? For example, I have a target of 49.62. Yeah, you can look at ES1 for those continuous chart targets. 49.62. Yeah, that looks right about up here in that buy side range that I was talking about. So yeah, you can definitely look at the continuous chart. Like I said, we don't normally want to look at the continuous charts when we're just doing our charting and analysis because the most current monthly contract is going to have the inefficiencies and the more accurate price data for what's being traded right now. And that's what you want to make your trading decisions off of. But once we get to a point where we're trading beyond all the price data that shows on the current monthly contract, since we can only see back to around here on the current monthly contract, then yes, you can look to the continuous and see what exists before that. Because people trading this from a very long-term perspective will still be using this old data as areas where they can place protective stops. Right? So there's going to be liquidity above this high. There's going to be liquidity above this high. Any other questions here on ES? It's all good. Okay, sweet. Not too much different really to discuss on NASDAQ. All the same principles apply here. On the monthly, you can see we got the immediate rebalance worked up through buy side right there, and then dropping down to a weekly. Same idea. Ideally, we create a new BISI in here on the weekly chart, which would mean that the next weekly candle can do something like this, but does not trade all the way down to the previous candle's high. Because if you just get something like that, that would leave a new inefficiency in here. Okay. So you could see potentially price come into that range and then continue to work higher or something like that. That would be fantastic to see if we're going to continue reaching up to higher prices. Dropping to a daily chart. We worked off the low end of this BISI and the old high. We had the overlapping P areas that we talked about. Ripped up higher here, back into a premium. You see we're closing through premium arrays. So we have this SIBI right here. Note how the bodies are closing above it. And then when we drop back down in, we're showing that continued bullishness failing to even reach into the old inefficiency down here. But what you do get, if you take your fib, put it low to high, you see how price reaches very nicely back to equilibrium right there. The midpoint, allowing one more opportunity for accumulation before running up to the buy side up here. Okay. And now we have created a new BISI right here. But the best scenario would be that this is left alone and a new BISI is created right here, and then that is used to trade higher. Price can trade into here and continue to trade higher, but that's a bit deeper than would be ideal if this is going to be really bullish and continue to work up higher. As far as the invalidation, same idea as ES. If price comes back below the low down here and gets that daily displacement lower, then we want to look toward this monthly BISI down here. Of course, if we don't get new displacement in here, if this closes up and you start trading into here and then back down into this down close candle, you can find shorting opportunities in there and even down toward this inefficiency in this low. So you don't have to wait for the invalidation to occur to find shorting opportunities, but that invalidation there would be when we change the idea from price could still trade higher to price is more likely to trade lower into the monthly BISI. Does that make sense to everyone? That is pretty much it on NASDAQ. Again, we can look to the continuous chart for price targets, and you can also do your fulcrum point projections right here. So I'll put on the prices. And you can see these as your next targets for NASDAQ. So we have 17,580 3/4. And then the one standard deviation up here, 17,996 1/4. So if we're really going to get run in here, these are areas that price can potentially reach to. I'll look at the continuous chart really quick, and we can just see what's available up here. NASDAQ really getting close to the buy side up here. So this would be the next area I expect NASDAQ to reach for, 17,700 there. On the weekly chart, we do have a small high before that, but if we're going to trade through this one, my expectation is just that we would continue up to the buy side up there. And you can see we are trading and closing through this weekly SIBI. So that's another good indication that if price remains in or above this, that it can be used as inversion and just trade up to the buy side up here. Sweet. Yeah, manual looks clean for buy side delivery. Yep, sure does. We're getting close. So you get this whole idea here as a market maker buy model, right? Your original consolidation up here, got your distribution, redistribution here, smart money reversal down here. And then this is your low risk buy in here. Depending on how you look at it, you could have it in here or here as your low risk buy, and then reaccumulation here. And now we're going to get that offset distribution above old highs up So anyone who was long buying in here, 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 can now sell their positions above these highs. Any questions, concerns here on NASDAQ? Good. Okay, looks like we're all good.
And if you
And
want, you can go ahead and you can go over your trading exercise if you want while you're already there.
yeah, we'll take a look at that. Whoops. MNQ. All right. Oh, I'm on stocks, that's why. Oh, H. There we go. Okay. Put on my paper trading. I did have two losses this week. And I will show why. I was actually trading counter trend here. And I saw we actually had a little bit of a pattern of this, and I fell to it myself this week in the training exercise. And this is a great example of why oftentimes we're best off trading in the direction of the higher time frame bias and not against it. So here is the idea here. On Tuesday, expecting that price could work lower early in the week. This is a 4-hour SIBI up here. So as we get into the New York session, what I was seeing is that here we have the London session. So price is running above the buy side right there. And I was expecting a potential New York reversal back toward the London lows. So we could work lower on Tuesday and then work higher later in the week. That was the agenda, but it happened on Wednesday instead of Tuesday. And here, you can see we're working above the buy side, above the highs right here, working into the 4-hour SIBI, purging buy side again. And then right here as we get to the 9:30 open, expecting this to be the Judas swing, running higher above buy side right there. And then dropping lower, creating a 5-minute SIBI right there, along with the breaker. So low, high, higher high, or excuse me, high, low, higher high, dropping through. And then I took my short right there inside the SIBI. So you can see the entry right there. And then I stopped out above this candle's high right there on the first one. I didn't immediately invalidate the idea since we just traded into the up close candle here. I was expecting we could make another move lower off of that. In hindsight, it was a bit premature and it would have been better for me to wait for another opportunity afterward. But hindsight's hindsight. I can learn from that. What I did, I took a second entry on the 1-minute chart, attempting this again with a 0.25% risk instead of the 0.5% that I took on the first one. So you can see where I took my stop out there on the 5-minute. I was expecting this to be a breakaway gap here on the 1-minute, and for for NASDAQ to just trade inside the SIBI and then continue to work lower down here. But instead, we do trade up into these inefficiencies up here, which is just like your OTE idea, right? If you put the high to the low and look at the OTE, we're just trading inside that range up there. And so we run up, we go into the inefficiency, purge the buy side right here, and then create a new SIBI. So I take my short, actually took it pretty early. I took it off the order block right here, but allowing price to return into the SIBI right there. And then I stop out again above the high right here. So you can see this one did briefly make a move lower, but ultimately the intention was to work higher off of here. So Got it wrong on Tuesday, but managed my risk with the 0.5% and the 0.25%, and then stopped for there. And that's fine because overall, and you'll see this in your own trading as well, when you have a model that you see working consistently, your winning opportunities should be able to allow for losing trades. So all good this week. We do end up trading nicely off of there. So once you see this trade through here, you can see the inversion used there and then creating new BISIs right here. So I had already stopped that at this point, but after this stop out, had I been able to take another trade, this is a great long entry in here to continue working up to the buy side and then higher targets. Any question on my trade here? Otherwise, I'll pass it over to Carson, and then we'll get into the rest of the trading exercises. Ron John says, that was a seek and destroy day. Watch price action closely today. Yeah, it was a bit of a tougher afternoon, I'd say. The AM session was fairly clean. I was just a bit early to the punch. But yeah, nice long opportunities within here. And in hindsight, of course, I'd wish I'd been a little bit more patient here to see this develop. And yeah, really nice opportunities there. But yeah, tricky afternoon after that, right? Persian buy side up here and then just dropping back off into the range for the remainder of the day, which sets up nicely for Tuesday, that consolidation, and then Wednesday to drop below like we saw here, create that low of the week, and then continue working up higher toward all these relative equal highs that we've been talking about. Sweet. Okay. I'll pass it over to Carson here.
Alrighty. So my trades. Can I use my screen there?
Yep, you're good.
All right. So the idea was kind of same thing with Henry, but on Wednesday, right? Was really looking to see after we had delivered below this sell side liquidity on the 1 hour. Looking to try to get a buy entry. You know, same thing as Henry. I was premature in the market. Was just a little too soon on my entries. And I think also another thing that hurt me was I spent a little too much time on a little too low time frames. But as I'm clicking through, I saw, you know, obviously we had a 15-second breaker in here, a little bit of displacement. So the idea was just to go long in here with my stop loss at the low. And you can see that it gave me a little something, but didn't really give me enough to really get anything out of it or go break even. So then you can see I got stopped out right there. And then, you know, and this is me getting my groove back in things. But once I had seen that, I kind of waited, and I also saw, and this is me staying too, not focusing on higher time frames. So, you know, take this as a lesson as, you know, although the lower time frames are good, they're not in any way, shape, or form in hierarchy to the higher time frames. And I think I was also trying to get a good entry, and that can hurt you. You know, the most important thing that is your exit, not your entry. And so once I got stopped out here, I did not wait enough, but I kind of saw a breaker in here, so you have a low, a high, and I kind of prematurely expected this to be a breaker, even though you can see we did not get any candle closure here, but I saw it kind of slipping through here enough, and I saw relative equal lows. So I went ahead and I sold here with the idea that the mean threshold of this as an order block basically gets hit, and you can see that I got stopped out right there. So then that's back-to-back losses, but here I'll show you guys really quick too. I was not using full risk, so a little under 0.5% here, and then I had a smaller risk here, so I wanted to offer one more trade opportunity there. And then after seeing this displacement higher with the idea that these relative equal highs would draw price higher, you can see from there, I went ahead and got long, but because of my risk, I did not have enough to put it at the low. So what I ended up doing was I put it right here with the idea that we would not go below this area right here. I was viewing this as kind of a balanced price range breakaway gap. So you can see I got long in here as price is kind of pushing down into what I thought was a breaker in here. So you have a low, a high, take out the low, and you can see the clear displacement with the clear liquidity. And I would have been able to mitigate loss had my stop loss been at the low. but my stop loss was too tight, and you can see that we weren't quite ready to go. And then you can see from there, I obviously had the direction, but really just got the distortion. I got caught up in the distortion, was a little too premature, right? Had I not been so antsy to get back in the market on the second try, and I would have waited, this third entry would have allowed me to have a little bit of a wider stop. And you can see I would have been able to grab something from there, at least mitigate the loss. And you could have seen I could have been able to play anywhere from 10 to 15 handles higher into the pre-open highs. But obviously my prior decisions caused me to try to fit a trade too tight. And you can see this buy was stopped out right there, and really was just not able to allow for anything to really move and breathe. And that's why it's important to really focus on this. Looking back at it, if there's one thing I could have done better, I think I jumped the gun way too early on the second trade. You can see that obviously I went against my first bias, and there are times where that works, but there's also times where, this is a 15-second time frame. So by the time I had got stopped out on my first one, I was already back in a trade, 5 minutes later, and I did not allow time to really show me what it wanted to do, right? We never got really clear closure under here. And I think it was me, this being my second time kind of pressing the markets. I 100% sure I was antsy. I was wanting to get into the market. I was not patient at all. I kind of just was jumping the gun on everything. You can see my clear direction was all right. And you can see that even on this third trade, it would have been a perfectly fine trade, right? It gave you the displacement. It gave you the break and structure in here. And even if you go in on a 1 minute, if you go in on a 1 minute, you can see obviously too, it wasn't the run that we wanted, but the direction overall took its course later in the week. But even if you go in on a 1 minute, right, the reason I was all in such low time frames is there wasn't really a whole lot to give me on a 1 minute, which should have. And if there's nothing that's giving me anything on a 1 minute or 2 minute or 3 minute or 4 minute or 5 minute, if there's not clear price action, I had the wrong idea of what my solution should have been. Instead of continuously going on lower time frames to try to find something, which is in theory good, if it's not showing me anything, maybe there isn't anything. And in this case, there wasn't really anything. And I was jumping the gun on almost all three of these trades, when in reality, if I would have just waited a couple, half an hour later, you had a good entry down in here and a couple low risk entries down in here and down in here, right? So, I think a lot of it is me trying to catch the low of the day, right? Instead of trying to get in here, trying to get in here, or trying to get in here, right? Allow this to play itself out and try to find an entry in here, try to find an entry in here, try to find an entry in here. So you can see I was just way too early to the party. I was trying to get way too low in the market. I wasn't allowing it to give me anything clear. And I was kind of trying to force something, right? You can easily tell I was trying to force something in the market, right? I kept going into lower and lower and lower time frames to try to see something. And even when it gave me something, it was nothing that was valid. It was nothing that had weight tied to it. So got caught up a little there, but obviously still made sure that, I am still a little bit in profit, but definitely took a little bit of a toll there. Basically hit my max stop loss limit for the week on that, but wanted to make sure that obviously no more trades throughout the week, just kind of kept it cool and realized though, just like Henry, later in the week, we did get, obviously it was a day or two later, but with regards to the direction, right, we played out how we wanted to. So it was just definitely premature, definitely trying to fit a square peg in a round hole. And I think it's a lot of times, like I've said multiple times, like you want to get all of this stuff out when you can and get all of those jitters out and make sure that when you're going into that live environment, you've done all of these things as much as you can in a paper environment to ensure that you're kind of getting your grounding. With regards to my emotions, after this first loss, I was not even keeled at all. I definitely had a sense of impatience, and I was wanting to get back into the market. And I think I was too quick to the idea of giving up on my initial bias. The second I had gotten stopped out, I immediately thought that we were just going to continue lower for the day rather than just letting it play out, giving myself 20, 30 minutes to adjust, come back to emotional equilibrium. I was very quick to hop right back in. And then when that stopped me out, I went back to my original bias, which was correct. I just didn't have enough risk to fit in to have my low. It would have been over my risk management limit. So I kept it where it needed to be. And that forced me to get stopped out a little too early when I could have potentially had enough room. Had I not taken this second premature entry, it would have caused me to have enough room to just put my stop loss at the low, and I would not have gotten stopped out, and I would have been able to capitalize on this run, take partials at these equal highs, and then from there, mitigate my initial loss, maybe have some more profit. So definitely some mistakes on my part. But that's why we have these training exercises, right? Trying to identify these things, get them shaken out of my system come February. So by the time February comes, I'm a lot more even keeled. I'm a lot more loose oiled with regards to my trading and how I'm reacting into the market. Any questions here? When you trade less than the 1 minute time frame, are you basing all your trades at 5 minute plus? Yeah, so I'm still, it's not that I'm not looking at those 1 minute to 5 minutes. I'm still looking at them. I am basing it on a 5 minute to 15 minute basis. But I'm trying to fit an entry where it's not seen on a 1 minute, 2 minute, 3 minute, 4 minute, and 5 minute. The only reason I'm using those 15-second time frames and 30-second time frames is to try to see displacement that is not occurring on higher time frames. But that can sometimes be harmful to you, because if you're getting displacement on a 15-second chart, but you're not getting displacement on at least a 1 minute chart, then maybe it's not truly displacement, and maybe it's too little of a time frame to hold any weight on, and that's where I got caught up, right? At that point, we were really just distorting time. Right. And we're just kind of oscillating back and forth. And I'm getting chopped up on that because I'm taking what's a small 15-second breaker or displacement. And in reality, it's just distorting time in that small of a range. But yes, when I'm using anything less than a 1 minute, I'm still looking at a 5 minute and even higher, right? I'm still identifying all my higher time frame stuff. I'm just scaling very into where my entry could be. But to answer your question, yeah, all my trades are based on at least a 5 minute or higher, depending on what it looks like. It could be a 5 minute, could be a 15 minute, could be a 1 hour, could be a 4 hour. And even then, I still have eyes on where my daily things are. Because there are times where I will have an entry in a 30-second time frame, and I will carry it into daily liquidity. But odds are, and I think rule of thumb is, when you're trading those smaller time frames, ensure that you also are getting displacement on a 1 minute, on a 2 minute, on a 3 minute, on a 4 minute, or on a 5 minute. Don't just look for displacement on those smaller time frames, because you can see I got hurt this week trying to just look for just any and all displacement. Make sure that if you're on smaller time frames and you see displacement, pair that with some form of higher time frame displacement, right? If you're just utilizing that smaller time frame displacement, that can kind of be a smoke and mirrors with regards to what's going on a higher time frame basis. So obviously just very premature this week. Market got the best of me. That's okay. As long as, like Henry said, as long as you have some form of risk management plan that stands in front of when you win, and you have a certain, 3 things can happen: small loss, small win, big win. Small loss, small win, big win, right? So in theory, I took my loss. That's my small loss. Over time, right, I will get wins, small wins, big wins, whatever the case is. So that's it for my trade with regards to this week. I will go ahead and go into the exercise this week. I do want to say we had a lot more participants this week, so I am happy about that. I saw you guys sending those in. Let me go ahead and share my screen here.
Yeah, that's awesome, Neil. Great participation this week.
Okay, so obviously we had a bank holiday on Monday. Last week's assignment was all about identifying some form of opposing liquidity pool taken prior to getting into a trade. Utilize your model, but make sure that you have a clear pool of opposing liquidity being taken prior to your entry. So this was Ron John's. The duration of the trade was 18 minutes. He had 2 NQ short contracts. 1.7 risk to reward. He was trading in between 9:50 and 10:10 a.m. Eastern Standard Time. He was using a 5-minute order block, bearish order block, to get into the trade. He was not using any form of specific open. The specific draw on liquidity targeted, stop placement, partials taken, time of break even if used. He was using low risk liquidity conditions below. The target was each of the sell side. He said each of the sell side liquidity depicted in the chart below. I moved my stop loss to break even after the first take profit of 15 handles hit. Unfortunately, I was stopped out in the next position at break even, and then the market continued to dump to my take profit to 27 handles. Emotions before, after seeing NQ take out the liquidity in ES and the Dow didn't. SMT divergence and low resistance liquidity run conditions made me confident in the trade. I was very calm in my executions and was tape reading as the market continued to respect the 5-minute order block and fair value gap. During the trade, he was relatively neutral. He had accepted the loss once I had entered the trade. And then after the trade, after his first take profit hit and I moved the stop loss to break even, which was taken out, I was a bit frustrated to see the market dump without my position. Journaled it as learning to not move my stop loss too quickly. So when we go in here, you can see he's identifying the SMT with regards to the S&P and the Dow, right? This took the higher high, the others didn't. He's got one take partial here at the low, looks like prior to 8:30 low and around the 8 o'clock low. And then he has kind of that intermediate mid-London session low in here. And then he had these relative equal lows, which was going to probably be his terminus. So you can see he's getting it in here. Once he sees that SMT and price is kind of displacing back below this market structure shift on a 5-minute, I guarantee you he's using this candle body closure right here as an order block. So his price is pulling up into that order block. He's going short. He's tape rating it. You can see he sees the SIBI in here. He's following that SIBI. Price did, obviously, he took a partial in here. And then I'm assuming your stop loss got hit. Looks like your stop loss got hit in here. So it looks like you just kind of moved your stop loss, or it was in and around your break even. But it looks like the second go around where it came and touched this 5-minute fair value gap knocked you out. But you were able to take a partial, so that's good. But then over here, I would say as you're trailing your stop, like you said, yes, let it breathe a little bit. But really, you can see you have the SIBI right here, but then you also have this BISI, right? And I would say, as you're looking at your stop loss and where you're moving your stop loss, know that you've just traded through this BISI and give this BISI enough room to be used as inversion. So really, if it was me, I would look at the consequent encroachment of this wick that you had entered on. And I would also look at the top half of this BISI right here. And that's where my stop loss would be sitting, right? That's where my stop loss would be sitting until we saw other displacement, right? Where did we see other displacement? Right here, right? And even though it looks like, oh yeah, your terminus would have still gotten hit. So I think, as you're thinking about where and when to move your stop loss to break even, maybe don't always go into break even, but have an area where you might be able to adjust your risk a little bit. Even though it might not be break even, you're still giving it a little bit more room to breathe. So in this instance, instead of putting it directly at break even just because one take profit got hit, you already paid yourself, just reduce it a little, but look at really where the chart's giving you areas that make sense, right? And to me, it would make the most sense to at least let this BISI be traded through as inversion, right? So you collapse below it. I would make sure that you're giving enough room for this entire BISI to be traded through as inversion. Even if it wants to come all the way to the top of this BISI after inverting it, that's okay. As long as your stop's above it, right, you would have had enough room for it to breathe and then allow it to go lower. But you still were able to take partials. That's why partials pay always. So you were able to get a little something out of the trade. And although you did get stopped out of the trade prior it going in the direction that you wanted it to the areas that you wanted it to, right, that's still a mental win, right? Those management things are always going to get tweaked and always going to get better. You had the direction right. Your targets got hit, even though you weren't a participant in it. You saw it before it happened, right? Mental wins are good, right? Sometimes they're even better than just regular wins, right? You're learning, right? And you can tell that it's not what you see happening. That's not the problem, right? You saw that happen before it happens. It's the tiny things of how to react, how to move certain things, when to move certain things. And I think the biggest takeaway that I would give you is just look and see what PD arrays are in and around your entry. And once price starts to trade away from it and you do get that first partial taken, right, immediately look and say, okay, based on the PD arrays that have formed in and around where my entry is, where can my stop loss go that makes the most sense, right? Because yes, the break even is good, but if your break even is at a point where price could still trade to, you already know that it could stop you out. So it's not a case of being break even, right? You still want that to be a point. It's got to be a point of invalidation, right? Invalidation, 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 right? At what point? Because I guarantee you, when you put your stop at break even where it was, there was probably still points in the market that it could have traded to, and your bias was still correct, right? So try not to squeeze it too tight. Know what's going to invalidate it, right? To me, if I was short in and around where you were looking at, my eyes would go to this BISI right here. I would note that we just traded below it. So now, to me, in my head, I'm thinking, I don't want price to trade back above this BISI. I want my stop loss right above it. And then just use the idea of the inversion as your invalidation. Because if we get back above this BISI, odds are we could use it as support and go higher. But if we're going to invert it, we should stay below it no matter what. And so from there, use that. And then once you get that displacement, once you see this displacement on this candle right here, this yellow candle, once you see that, then you can go to break even. Hopefully that makes sense. All righty, next one. Miss Leslie traded the 2 p.m. silver bullet on Friday. The duration of the trade was 80 minutes. Waited for a pullback after the lunch high was taken, and I was targeting the lunch low. My emotions were all over the place because price had been going up all day today, and I did not want to seem as if I was picking the top. She entered price at 48.6750, stop loss at 48.7250. The take profit was 48.57 and a quarter, and originally, but moved it to 48.62. Price was chopping up and down for over an hour, only to be stopped out. So, a couple things here that I'll note, but I'll go into the picture first. So you can see sell was there, right? 2 p.m. silver bullet. You get your CIBI, you get your shifted market structure. All was good there, right? Makes sense. But there's one key thing that I think your stop loss placement is good. I think all of that is fine. I think that this trade was perfectly fine. There's one thing, and you even said it, and I don't think you realized it at the time, right? You said price had been going up all day, right? So if price had been going up all day, right, you're already, if you think about it, price had been going up all day. So in reality, price isn't just going to always continue to go higher. Sometimes it is, sometimes it is, or sometimes it isn't. Sometimes you'll get a retracement. But when you're looking at probabilities, right, and you're already coming off of a long range day, and you're still in that same day, the probability of price reversing and the probability of price continuously going higher is not greater than price just consolidating. Right? And that's why you're getting that chop. So in your head, switch to the idea of, okay, what's most probable for me? Price has already been moving a lot all day. We've already cleared a long range day. Although I know we could get a reversal, and although I know that we could still potentially go higher, I am now in a position of high resistance liquidity, right? You have to almost now assume the probabilities are now in favor of price doing what? Chopping, starting to get a lot more high resistance, right? Because it's cleared a lot of that low resistance. So that's something that I want to kind of at least put in the back of your mind of being aware, and it's hard in the moment, but being aware of like, oh, we've been trading a lot today. We've cleared 40, 50, 60 handles. Yes, I see a setup, and yes, we could potentially reverse, but you also have to remember you're kind of counter trend because we have been bullish on indices. So you are counter trend. You are coming off a long range expansion day. So the probabilities of price either consolidating and or going higher are a little bit more greater than price reversing. So just keep that in mind. And if you also look in here, you can see right here, there's a little bit of a BISI right in here, right? And you can see that there's a BISI on that 1 minute. Price trades back up into this. But what I would have also been looking at, right, is you do have this up closure candle in here. And as price is trading, and this is something that I'm going to try to get good at this year too, is really, because I've seen Michael do it. When you watch Michael's videos of his trade reviews, he's very good at understanding what price is doing while he's in a trade and the tendencies that are occurring. Once he places the trade after the fact, he's able to identify how that market is reacting, right? So you kind of have a BISI in here, and you can see that price is kind of trading in and around this level, and it's kind of consolidating, and it's not going anywhere. If I'm not seeing any of these candles, these down closure candles, because what does Michael say? What does he teach? When price is going higher, it respects and should not trade lower into down close candles, right? So if you're expecting price to go lower, in this case you are, these down close candles right here should get invalidated, and you should see price have following down closure candles below them. But if you look at all three of these down close candles, you can see price is not closing below any of them, right? So that's something to think about, something to keep in the back of your mind. Also, you can see right here what you're using as a market structure shift, right? This set of down close candles, you always want to play devil's advocate too while you're in the trade, just to identify what could potentially go wrong, right? You've got these set of down closed candles that could be used as an order block. So what I would have done too is identify the mean threshold of this set of down closure candles, and you can see price is kind of respecting it. So as price is not giving me closure below the mean threshold on the first go around, and or the second go around, and or you can see price start to pull up in here, I want to try to encourage you to start to anticipate when your trade could potentially go wrong, right? And through that experiment and through that research, there's going to be times where you might think it's going against you and you close the trade too early and it does go against you. But and it's a hard thing to research and it's a hard thing to study, but that's why you do it on paper accounts, is to try to identify when that trade is slowly turning against you. So there's a lot of things here. The setup in general is good, right? I agree, right? You have the SIBI, you have the silver bullet, the timeline's up, but I think all the external factors are kind of going against you with regards to the probability aspect of it. Another thing that I would have looked at too is this down closure right here is a perfect breaker, right? You've got a high, a low, a higher high, you take out that. So what I would like to do too is I would draw this out and I would look to see if we get back below that breaker. If we do, great. If not, and we start to respect it, and you can see candle closure really is not giving into the lower half of that breaker, then that signals to me, hey, that bearish breaker should be playing out. It's not. Maybe we're not going to get a run lower. Maybe I can potentially collapse the trade or collapse half my trade, or maybe move my risk a little bit lower, cut it in half, because the signatures and price that I'm looking for are not aligning with what I want to see. So therefore, that could potentially cause me to want to cut things in half and maybe start to cut a little bit of my losses before they happen. But overall, I mean, the idea is great. I think it's just some of the external factors and being able to understand what price is doing while you're inside the trade. Sometimes I think we get in the mindset of just, okay, here's my model. And I do agree. It's the idea of you have reasons to get into a trade. You set certain targets and limits and you let them be. And that's great. But I think over time, to really understand and get an expertise in the market, you want to identify what price is doing, because if you can get to a point where you can start to understand if and when price is going to go in your direction or not while you're already in it, you might still come out of this trade with a losing trade, but you might also have gotten out at break even before even taking a partial, or maybe even had half the risk taken off before you got stopped out, and at least save yourself some of that Henry, is there anything you want to talk about here?
I think you covered the points I wanted to touch on. It's just that idea of a partial doesn't always have to be a partial profit. A partial can be partial mitigation of a loss as well, or a potential loss. So I try and, when in a trade, look at things on a scale of, and just like I was talking about in the weekly analysis, what's the most ideal scenario for what price could do? And then what could price do and still work? And then what could price do? And if it does that, it's likely to fail. And if you're not seeing the most ideal scenario play out, then you have to start to potentially adjust what your how you're going to manage the trade, right? If it's the less ideal scenario where it could potentially work, you want to watch price action a little bit closer. And if you start to see PD arrays fail that you'd expect to be supporting your trade idea, then that's an area where you can decide if you want to cut part of your position. And you'll see Michael do this too in his trading. Most of the time, he's entering at times where a price run is expected really quickly, but you'll see it even when he's taking his partial profits as he's getting toward the end of his trade. As a PD array fails, and there's the idea that maybe the terminus will not trade, you'll see him cut part of the position off. He still leaves a piece of it to run to the terminus, but part of it is being cut as a PD array begins to fail. And you can do the same thing when you're in a situation where a trade may likely turn into a loss. If you're still right around that break-even point and you start to see a PD array that you expect to support price begin to fail, you can cut half of your position, because now you're providing yourself with the opportunity to take either a smaller loss, or if the trade does go into profit, you can still be profitable on that trade and take a small win or a break-even trade out of it. It just helps to support your profit curve in the long run, right? Because the trade scenarios that are the most ideal, how you'd expect it to play out, and it's just playing exactly to tune with how you'd expect, those are going to be the opportunities where you get an easy win or an easy big win, and you want to be holding on to your position in those trades. But if it's not doing what you expect it to, there's absolutely nothing wrong with cutting part of your position and then allowing the trade to play out from there. So I think that's a really great point. That is mostly what I wanted to touch on here.
That's good.
Otherwise,
two other things from my point. I'm not sure if you knew that you were trading the minis, but 5 contracts is a lot. I would not, if you're going to trade 5 contracts, make sure you're trading on the micros. 5 contracts on the actual mini is a lot. I know sometimes we can get messed up, but that's something that I did notice here. That's a decent amount of volume. So make sure that when you're trading, have a little bit, we're not here to make a lot of money. You can't even make money on the account, on the demo account, right? These trading exercises are just for learning. So make sure that if you are trading those higher contracts, they are on the minis. They are on the micros. And the last thing that I can say is I see up here Proverbs 18. I love Proverbs. It's a good book. Keep reading it. It's awesome. I claim victory over any challenge that I face today, for I know that greater is he who is in me than he who is in the world. So keep it up. And this is how you learn, right? You don't learn a lot from winning trades. You learn like stuff from this, right? This is a really good trade that you can learn from, because you can see that there's so much that might have looked right, but there's so much also that can be capitalized on and that you can get better from. But keep it up, keep going, and I can't wait to see your trade next week. You can see right here.
Yeah, good going, Leslie. Yeah, this is a good one for everyone too. Just make sure you're following the risk rules set in the exercise, right? On your first trade, if you're in profit, you want to be risking at maximum 0.5%. And then if you're taking a second trade after that, 0.25%. So a good thing to do, and I like to do this when I take my trades on the account as well, is you can use the I forget what the tool is called. It's like the trade tool where you can set the risk reward and stuff. What do they call it? The position tool. Yeah, the long or the short position tool. And you can actually put that on your trade where you expect your entry to be and where your stop loss is going to be and your take profit. And then if you right click on it, you can do create limit order. And then it will actually give you a form in there where you can set the risk percentage, and you can put it to 0.5 or 0.25, and it'll set the position sizing and everything for you. So it just makes it easier to calculate the positions and make sure that you're following along with the risk rules. But otherwise, really great, Leslie. Great learning opportunity there too. Awesome job. Thanks for your submission.
Alrighty, Alan, I'm only short-term bullish, but long-term more time set aside based on DXY and current higher time frame targets and movement on NQ. This is weird to say, but I felt nothing. My higher time frame bias was clear, and my target/stop are pre-planned. So here we go. Here you can see he's got this BISI. He's got his original stop loss was down here. You can see he's looking into price trading into this bullish order block. Very clear buy-side liquidity, trading on a 5-minute time frame. You can see through here, after he sees price trade back into this BISI and the way it closed, he's going long in here. He understands that right here, he can move his stop to break even. So from there, he's taking a partial as price trades into this high, price trades into the high. He takes a partial, moves it to break even, and then just allows price to trade higher into the break or into the buy side liquidity. Overall, good trade. Very simple, easy. Looks like you were able to catch NASDAQ on an easy run. Looks very low resistance liquidity. Doesn't look like price gave you too much of a fight with regards to drawdown and heat. You were able to catch it coming off that, it looks like 10-10 macro, that 950 to 10-10 macro. You let that play out, and you kind of did not get caught up in the pre-chop that was in and around that time. So patience definitely paid you this week. I almost feel guilty. I felt nothing. I suppose I felt a little nervous when I had to move my stop and thought my second target would not hit. Is it wrong to set a trade plan and forget it? Can I get some opinions? I think it depends. I cannot, me as a person, I cannot set a trade and just forget about it. If that is something that helps you, great, but I think it's something that you don't want to have in the long term, because as you experience and as you start to get better with understanding and reading live price action when it's printing, you kind of, there's a ceiling, right? Your ceiling is very right there because it's whatever it is there. But if you are focused in from the start of the trade to the very end of the trade, you potentially have room for a higher ceiling, right? If you just set it and forget it, you've capped it at what could potentially happen. And that's okay. If the emotions affect you, that's a good way to not allow the emotions. But I would press and say, stay in front of that screen, stay in front of what could potentially happen, try to see what can happen. Even though in the beginning, you might feel as if you're trying to do too much and that might hurt you, in the end, all those little tiny mistakes that you might make as you're sitting there trying to be focused in and watch the trade play out, over time, you're going to learn from those mistakes, and now you're going to create a larger ceiling for what could potentially unfold. That could be mitigating risk. That could be having larger profits. That could be multiple things. But I would say that a lot of times when you have the set and forget mentality, it's because you fear of what could potentially happen on the emotional side of things. And I like to tell people all the time, right? All of your fears, the only way you're going to get rid of those fears are if all those fears that are behind lurking you, that are in the back of your head and all that stuff, the only way you're going to fully get rid of them is if you turn around and face them front and center, right? And it's going to maybe come with a little bit of pain at first. You're probably going to make some wrong mistakes. You're probably going to do some things wrong, but you're going to learn from them, learn how to react properly. And from then, instead of just setting things and forgetting about it, you're going to now have so much more clarity on what could potentially happen, but you're now going to cause yourself to, one, maybe get more out of a trade, and or also you might help yourself from, instead of just maybe going break even, you might have a stop profit that is a lot better, because let's say you set it and forget it and you did get this first partial, and then you set yourself against the break even, and then you walked away, didn't watch it. Well, what if price wasn't ready to take the buy side? And what if it got close but came all the way back down and stopped you at a break even? But if you were actually watching the trade and you were able to trail your stop loss accordingly, you would have been able to not get break even, but maybe get even a whole nother piece of the trade without hitting your terminus, right? Maybe you would have gotten another trade stopped out where your first partial was, right? And those things compound over time. So I think it's the thing of you know, in my opinion, you're capping yourself on your ceiling on what you can earn, both your experience and also profit / mitigating loss. Your ceiling is going to be set there, and there's nothing that can grow from it. If you start to indulge into price and understand it and really follow it from the time you get in the trade to the time you get out of the trade, and understand each candle that could potentially be ticking throughout it, you're now expanding not only your knowledge, but then your ceiling on what you could potentially get out of it. Anything here, Henry?
I think it's a great trade. I don't think you should feel any sort of guilt for not being emotional to the trade. I think that's a wonderful sign of growth, and a good indication too that you're doing things right, because ultimately you're when you have a model and you're consistent in the markets, you're just going to be doing the same thing over and over and over again, and it should kind of become boring to you. Still interesting, right? But the process itself and how you feel throughout the trades it shouldn't be exciting to you while it's happening. It should just be normal. This happens over and over again, and having that lack of emotion or the feeling of boredom throughout a trade is where you want to be at. So really well done.
A good trade. I like it. I like it. Good stuff. Alrighty, Miss Kate. She was bullish this week. The narrative was, we spent the first 3 days of this week probing lower, but closing well. So I thought today might be the day that we finally went for the previous week's high. We opened and pushed up immediately, coming within 4 or 5 points of a previous week's high and taking a short-term high. But then we sold off. I thought we could take the lows pre-market first, but we went back up for the previous week's high. The trade idea was, after taking the pre-market sell-side liquidity, we displaced above the CIBI with a BISI. That, to me, was a sign the market wanted to move higher. I began looking for an entry as price dipped back into the CIBI, using it as an inverted fair value gap with the stop below the inverted fair value gap low. First target was the buy side formed at 10 a.m., and the final target was the previous week's high. The emotions. Before, I was once again kind of excited / anxious / impatient about getting into the market. As a result, I entered the first trade near the top of the implied or inverted fair value gap, when I really wanted to enter more near the consequent encroachment. During, I added a second contract when price dipped back into the inverted fair value gap. So she's pyramiding. I wanted to be closer to the consequent encroachment, but price moved too quickly, and I ended up getting the second one at the exact same price. We started pushing higher, forming a BISI. I remember getting a little complacent and thinking I could at least get to my first take profit instead of respecting the latest BISI. Though price fell back with strength, closing below the latest BISI. When price did not show too many signs of bouncing onto the next candle, I decided to manually exit my trade for a small profit instead of letting it hit my full stop. After, price did eventually hit previous week's high, but not before whipping back and forth for some more. In hindsight, it seems like I could have re-entered when price came back into the inverted fair value gap again, but in the moment, I really did not like how strong the bearish candles looked dipping back down. I'm not that upset about missing the move because I read the market correctly, and I have to accept that there are days where I can read the narrative correctly and have the right draw on liquidity and still mess up. What I should have done was wait for price to return to the bullish order block in lower fair value gap area to enter. I would have probably been able to weather the whipsaw action a little bit better with that entry. So looking in here, and I've got some pointers on this, and then I'll give it to you, Henry. So she can see this is the inverted fair value gap that she's basically looking into, right? And she's basically, she has her stop below the inverted fair value gap. And you can see as price gave her a little bit of profit, but then as price started pushing back in, you can see that she's basically getting out right here. And I think that this was in and around her her entry. So basically break even with a little bit of profit. It's not necessarily stopping her out, but you can see that it would have stopped her out. So I think that's key to note too, is that she saved herself from identifying her intuition, right? That's an intuition thing. Right, that's that system one of thinking where it's almost second nature of just from what you've seen so many times again in the market, your intuition tells you that it's probably going to go to this level. So she quickly, without hesitating, takes it a small profit, because what is the main focus to do in this whole entire game of trading? It's not to win money, it is to manage risk and losses correctly, right? Manage risk learn how to professionally lose. And so from there, that is on the forefront of everything that you do. Every decision that you make should be, how can I manage my risk and cut as much of my losses as I can? And that's what she's doing in this thing. You can tell that by later, yes, it digged into the order block, it came back out, had another clear set of structure, shift with another BISI, and then came back in again, right? But you can tell that even after then, this probably used a decent amount of mental capital, especially doing something like that where you're closing a trade right as it's basically a little bit of profit at break even. You might feel as if you're going against your rules, so that might hesitate you a little bit more, and that's okay, right? Because if you look at what your P&L on the day was, it might not be a lot, it might not even be a little, but there's really no loss there at all. That's a win, right? And so let this trade, let it be a mental win, and that's perfectly fine. And then from there, yes, it's just a little bit of game of patience, identifying that, yes, it's okay to, because of how you managed your risk here, if this still looks very clear, you can still utilize it, right? You could go back in here with a now clear defined stop of this low and let it trade out. That's something that comes with doing this multiple times, and that's perfectly fine. And that's why, going back to the exercise before, that set and forget mentality, whether you're at break even or you're not at break even and you're just setting trades and forgetting about it, it can cause for you would have taken a loss here, right? If you just have no action. But trusting your intuition based on the amount of study that you've had allowed you to save and protect yourself from losses that you would have taken otherwise. So very good here. 9 minutes, 2 contracts, 0.36 risk reward with a potential RR of 3. But notice how this is positive, right? That 0.36 is fine. Over a span of 100 trades, even though it's very little inconsiderate, it's also not a negative 0.5% loss, right? And you want to think about that, right? That just also helps your confidence going forward. It helps the very next trade, even if that next trade is not this week or that day. If you look in here, you can see right here, this was overall, you can see, look at how in the moment it looks like it's not a lot, but she was still able to almost capture 0.25% just by that intuition, just by that understanding. Was she wrong? Technically, she was wrong. It would have hit her stop. Her invalidation point would have gotten hit, and it actually would have been a lot more frustrating because what her invalidation point was actually wasn't invalidating the trade at all. It was just a little bit more high resistance. And that's where I would also say too, sometimes, even though this is good, I would also start to look at identifying, even then, right here, this is a very tight stop, especially on NASDAQ, right? This is a very tight stop, and that's good. But also, you're using the implied fair value gap, but you could add one more array to protect you. And I think that it would help. And that would be placing it at this low right here, right? The low that basically starts the fair value gap. There's a little BISI in here, right? And this BISI's high. The low of this candle is right here. And so I would prefer to see your stop a little bit wider, because even though the tight stop losses are good, having one PD array that you're using, if you can find another one or another point of invalidation that might even give you just a little bit more room, it might not seem much in hindsight, but overall, it can protect you from stuff like this, right? It can definitely protect you from stuff like this, because having something that will potentially stop you out, you'll definitely get stopped out right here if you're using the inverted fair value gap. But if you just take it a little bit lower and you look and see, okay, well, I do have a BISI right here. Here's the first candle that creates the BISI. Let me use that low. From there, I'm at least giving myself a couple more points. I'm giving up a little bit of that risk to reward, but to ensure that even if you do encounter something like this, you're at least a little bit safer. And that could be a tendency thing, that can be a personality thing. That's up to you on how you want to manage that stuff. But to me, if I can see something that's close to, because I agree, I do this all the time, right? Inverted fair value gap, my stop's going to go below it. But if there's something that is in and around this that will give me a little bit more confidence, and I might give up a little bit more of that risk to reward, I'm 100% going to do that because now I feel safer, because if price is going to go lower, there's going to be times where it comes in like this and goes and goes. And then there's going to be times where you have that extra run, right? That's the tricky part of trading smaller time frames. So just gaining any little bit of confidence. And then, yeah, you can see right here. Oh, you're already on it. I haven't even looked at it.
Yeah.
That's funny. That's funny. So you knew it. Yeah, you're on it. You're on it. Henry, anything you want to say here? So what she's doing here is she's saying the best case scenario, right? After everything's said and done, what could have been the better idea of it. And that's exactly what I stated, right? And I didn't even notice this, but she's already 2 steps ahead of me, was having her stop here on the low of the candle that created this BISI and this BISI. Great, good stuff though. Anything here, Henry, that you want to touch on?
I think you hit the nail on the head with those adjustments, Kate. Yeah, just allowing all of the inefficiency the opportunity to trade. Remember, we're thinking of the market like the paint roller, right? And if there is an inefficiency there, you have to at least offer the opportunity for it to be traded to before price continues higher. This is a trickier trade, obviously, with this kind of sort of whipsaw action where you're seeing buy side purge and then come back for the inefficiency and then work higher off of that. But I think you managed it really well in the case of that, with deciding to cut the trade in profit when it wasn't following the expectations you had. And the only other suggestion that I could offer on this is potentially when you look to take your entry, have a glance at the 5 or the 15-minute time frame and see if you were entering exactly where you were, where would you place your stop loss on the 5 or the 15-minute? I think I'm looking at my charts right now, and if you look on the 5-minute, there's a BISI on the 5-minute right where you enter as well. So you could have your stop right below the candle that created that, which I think is pretty much exactly where you put your stop here on this adjustment one that you posted right around there. But overall, I think really, really good. And I think you did the right thing to mitigate it and cut it in profit. It's just like we talked about that scale of, is it the ideal scenario, or is it somewhere in the middle, or is it obviously not working? Then you did the right thing to mitigate. So,
and I think another thing too is like understanding that this is such a low time frame, where Henry said too, allowing this to trade to. And I think that this is the difference between lower time frames and higher time frames, right? Although there are plenty of times, and you want to get good at understanding what, if you're looking at a daily, treat it like a 1 minute, or vice versa. But in this scenario, because you're on such a lower time frame, if we were on a daily time frame, I would not expect this to be traded towards, right? Because of how close you are to this liquidity. But that's a daily time frame. If you're on these 1 minute time frames and even lower, or in and around those smaller time frames, you are a lot more probable to potentially get stuff like this to trade towards. Because in reality, if you look from this low to this high and you get your equilibrium, price has to trade into a discount, right? And on higher time frames, you start to realize that odds are, the closer you are to those higher time, the reason why it traded all the way back is this is such a small, significant pool of liquidity, rather than if this was a weekly or daily, right? There's a lot more money. If this was a weekly or daily, there's going to be a lot more money at this high than there is, right? There might be millions and billions of dollars at this high if it's a weekly or daily, but there is not millions and billions of dollars at this 1 minute high, right? So the liquidity, the weight of the liquidity is a lot different. So price is not as likely to just run straight to it and potentially whip out anything of, because you got to think about all the other things that are in the market, right? You have all of these algorithms nowadays that are doing these high frequency things and stuff like that. So there are probably so many bots that went long in here that probably had stop losses right here, right? And just this simple move took out a lot of liquidity to then go higher. But great trade. And I like that you went back and you did that. You caught me 2 steps ahead.
Let me jump to the screen share real quick, actually, because this is something we touched on last week, and I want to talk about this again. Here's where that, can everyone see my screen?
Yeah, you're good. You're good.
Okay, so I think it was last week, or it could have been the week before, where we talked about the context of the time frame that you're on. and when you're trading a model where you're trading from an inefficiency up to liquidity. So this is the trade that that you just had on Kate. So here is a 1 hour fair value gap where price is trading into here, trading into here, trading into here, and then ultimately looking to trade up toward the buy side above here. If you're looking to trade this on the 1 minute chart, where this is your entry in here, then here, I'm going to clear these a second so they're not distracting. This is the 1 minute entry right here, but your context off of that is only this high. So if you take this trade on the 1 minute here, as soon as this trades, yes, it can trade all the way up to here, but you have to look for what's been created within here as well. Because in this price run, from this low up to this high up here, when you're making that move, higher time frame inefficiencies can be created in here. And so what we do from here is go to a 5 minute chart and see the 5 minute context. And you can actually see here that here is a BISI here on the 5 minute. And price can work to the highest time frame.
Her entry created that BISI.
Correct. So now here I have that marked on the 5 minute. I'll make it green so it's easier to see. And then we'll drop back down into the 1 minute chart. And you can see that this low right there creates the high end of the BISI right there, which means it wasn't traded into until right here. And so if you have to allow then, if price is going to continue trading up here for any inefficiency below, that's between this low and the high, to trade back into. So if I look on the 5 minute, now if we're looking at that idea of the context again, now you have this inefficiency and your context can be up here. So if price is going to trade back into here and then trade up to this high, or if price is going to continue to trade to this high and then eventually to this high, you have to see what inefficiency exists between that low and that high and allow for price to return back into that. Which means if that could potentially trade, and if you're looking at this like your entry time frame, your stop needs to at least be down here. So it can return into that and then work up to this high. And then this is your 5 minute context. So as soon as price trades from here to here, you need to now look on a 15 minute and see if any new inefficiency was created in there. And it was not. So you can just allow for the 5 minute context to remain as it was. So your stop can stay here. This can be utilized again. And then it can trade higher up to the 15 minute.
Henry, I've got to run to the bathroom, but you can knock out the rest of the ones, or I'll come back and I'll put my opinion, but I got to run to the restroom.
All right, cool. Does that make sense to everyone? And like I said, Kate, I think you managed the trade perfectly. This is just something to watch for on future trades, and a good way to follow price action as you continue working up through the time frames. But there's nothing wrong. I want to say this with complete certainty. There's nothing wrong with cutting a trade, mitigating your risk, doing the things that you see appropriate to preserve your trading capital when a trade is not working as you expect it to. There is nothing wrong with that. And you should not be upset with yourself for cutting a trade and mitigating the risk when it's not working as you expect it to. Nothing wrong with that. This is just an opportunity to see when price is kind of chopping like that, how you can potentially set your expectations for where price could trade to and still trade to your target, which it does here. But I think it was managed really well. So great job there, Kate. I'll let you take it back over, Carson, unless you want me to pull it up.
Oh, you're good. I got it.
Okay. Yeah, just like Sarah said there, it makes sense, but I still need a lot of work integrating the various time frame aspect that we're talking about. Yeah, absolutely. It takes time to learn, and it's an adjustment, right? Because as you're in the trade, you have to be thinking about switching between time frames. So sometimes it can help to have multiple windows on on your screen, if you can set that up, maybe one where you're looking at a 1 minute, one where you're looking at a 5, one where you're looking at a 15, and then something on the higher time frame as well. But just be aware of that context idea. When you trade from the inefficiency to liquidity, new inefficiency can be created within that price run on higher time frames. And so you have to look and see what's being created at all times. That's just like when we go through the higher time frame analysis, and we're talking about the monthly and the weekly and the daily. We're not always expecting price to trade back to an inefficiency, but you want to be aware of what's being created. It's like how we're looking at the monthly and we're saying, okay, a new monthly BISI is being created there. We need to be aware of what is below price when we're continuing to work higher.
Alrighty, Mr. Axel, good stuff. All right, Mr. Axel, after missing out on beautiful price action yesterday, knowing that was my one good chance of a clean trade for the week, knowing we are in a fickle, unprecise market condition, I went into this one with a shrew mindset and expectations of shenanigans at the hand of the market. Ideally, I would have liked to see the manipulation at 9:30 happen at the opposite side for continuation, higher into the higher time frame liquidity instead of lower. And to higher time frame inefficiencies, already I felt my narrative and bias take a blow into the expectations department. That being said, I'm glad I got out at break even because my initial stop loss was in fact taken. Under different conditions, I would have held a bit longer and moved my stop loss to break even after taking profits on the low-hanging fruit. But if I'm getting into a trade, I'd like to be in it for the long haul. So if PDO raise, I mark are getting disrespected so quickly, that's a sign for me to cut my losses short and not hope that my fear is unfounded. Previous trade isn't my history because I changed account size for different purposes. Since last week, I've taken 3 trades, 1 last week and 2 this week. To be honest, even though it doesn't feel particularly great, it is helping me control my trigger finger syndrome. I'll take my little wins where I can. I will note too, guys, if you want to trade, or if you guys want to trade different account sizes, feel free to. I just use 100,000 just because it's kind of just there in the middle, kind of by default. And then high time frame buy side liquidity targets have been met, so I'm happy. Let's go ahead and look into it. So you can see he's looking at the 15-minute sweep of liquidity in here. He's also got a 1-hour fair value gap here. He said, once this candle closed above the mitigation, I closed in fear of the move just being an immediate rebalance on the 15-minute candle. Okay, so you can see he's in here. Selling once price pushes back up into here. You can see he's using this as a breaker block on a 1 minute, right? Using that entire down closure. He gets in here, coming down in here. And you can see that he's using this mitigation block right here as his kind of form of signaling him to get out. So it looks like he basically just similar to Kate, his intuition told him that it was probably not smart to stay in the trade. Although in this case, you can see it did kind of bring back up into his entry and just tested his entry one more time and revisited this 1-hour fair value gap before, in fact, displacing lower. I think that if you're looking at this, you could have maybe potentially gotten one quick trade out of this if you're going to look to see if this would have been inverted. I've seen Henry do this a couple times where you've got this BISI, and then once you trade back below it and pull up into it, you could have maybe utilized that. But like I said, to yours is your own. And then from there, you go down into this liquidity, and it did not reach for these relative equal lows, which would have been your terminus inside Tuesday's new day opening gap and a 4-hour breaker block high. So price would have maybe, you would have been able to take a partial in here, but it did seem like price was able to, in fact, make its way back higher into your entry either way. So, utilizing that intuition still, right? You're going to maybe fight the idea that, yes, you should have been inside this trade had you let it breathe. But still, you're testing that intuition. You're trying to understand how you react in the market at the time, right? Your intuition told you that that's something that you wanted to do. You closed out. You're doing what you're supposed to be doing, cutting losses, mitigating losses, protecting your capital at all times, and that's okay, right? Over time, you'll find areas where maybe you just want to like you did today, leave it as is, and that's perfectly fine, or maybe find a re-entry later, right? You've got a little BISI in here. You can see price just kind of oscillated around that too, was not able to really fully respect that, kind of overshot that. And I think that's just because you'd have this 1-hour fair value gap right above it. So it was really kind of playing to that. Going in here, you can see very small loss, perfectly fine. This is minimal. Commissions, call it. Perfectly fine. I'd call it break even. Join me on my first official recording of my trade as I fumble this narrative, LOL. Yeah, let's do it. I wonder if it's, oh, it's 5 minutes. I wonder actually what I can do. Hold on. Let me do the playback speed.
Make sure. Yeah. Turn audio.
Playback speed. All right. Let me make sure that my quality is where it needs to be. All right.
You can just skip it to the 3-minute mark if you want.
Okay.
That's where the entry takes place.
All righty. He's using this 1150 to 1210 macro. Understanding price is pulling up into that fair value gap. He's selling on up closure with the idea that the stop loss is above all of these candles. Price should not trade into there after inverting this fair value gap too. So giving himself plenty of room. Notice as you're getting in this, notice how price pushed up into the fair value gap, but did not close inside of it. That's a good thing to look at if you're going short. He's looking at other things, checking other things. Price is fully filling that fair value gap now. Price has fully filled that fair value gap. Revisiting into that inverted BISI down in here. You can see the respect coming back down and through, looking to see if price can close back below this SIBI. Now he's wanting to see price push fast through this. Oops, it happens. That's fine. So I mean, that's another thing too. So I'm going to go back actually really quick. Hold on, let me go back right. I'm going to go back really quick. Hold on. Oh, why did I do that? Okay, so this, and watch how quick this happens too, but obviously it's slower in real time. But when price closes back above this inverted fair value gap, right there, to me, trade cut. Just in hindsight, obviously it's easier in hindsight, but over there you've got ideally one PD array right here. You've got the mean threshold of something right in here on a higher time frame, and then you've got
Sorry, that wasn't a mean threshold. I meant to write a mitigation block.
Oh, mitigation block. Okay.
I just wrote the wrong thing.
No, it's fine. I mean, but still right there. So you have the fair value gap, the inverted BISI, and the mitigation block all being invalidated at this point right here. Even though it doesn't seem like a lot, try to get in the mindset of maybe not closing all 10, but maybe close 5 right on that closure. And that just takes it in, and those little things compound over time. But that's something that I'm getting better at myself too. And it's something that I think is it's almost like a new level of forward and stress testing on your own development, even when you've got a lot of things below you and beneath you as a trader. Something like this is hard to study, but very good of identifying, because there have been plenty of times where I've seen Michael, watching his trader reviews, it's almost like there's one specific candle closure through something that invalidates his trade, that he's either moving his stop loss down or taking half of the stop loss away. But it happens. I mean, me and Henry got chopped in the market this week too.
Yeah, I completely agree. The second that candle closed above that inversion fair value gap, I wanted to get out.
Yeah.
That to me was the indication that the trade was already over. But just for the sake of the video, I don't know, other things, I just let it run. I said I'm about to lose by maybe less than $200, so I guess it's fine.
your intuition played it to that though, right? And it's like you knew. And a lot of times, how many times I'll talk to everyone here, and you don't have to answer or whatever, but how many times have you felt yourself in a trade and it reaches a point where you know almost for certain it's going to be a loser, but you just let it hit because it's almost like a hope and a prayer. And so it's like cutting that from, okay, I almost know for certain this is going to be a loser now, so I'm just going to hope and a prayer. If it hits my stop loss, it hits my stop loss. Take that and change that into that moment you almost or for certain know it's going to be a loser. Have action, right? Whether it's cutting half the loss right then and there, moving that stop loss to wherever that is, or completely closing the trade entirely, right? Trying to just have some form of action inside your trading plan when you kind of immediately get that intuition of, all right, price is probably not going to, it's invalidated, right? You almost get that underlying invalidation internally. And so from there, your intuition knows it. It's just translating that into instant action. And it doesn't have to be everything. It doesn't have to be the entire trade, but even just cutting it, right? $160 loss might have been $130 loss or $120 loss. Even just that in itself, subconsciously, if you do have a little bit of action and then it does hit your stop loss, you're gonna be like, damn, thank God I did that. Even though it's not a lot, it's gonna be kind of a subconscious win. And you're taking away from just all of the weight. You're taking a little bit of weight off that just loss entirely. But that takes time. That takes, testing that stuff in a demo environment to get used to that stuff. But I mean, yeah, it was a hard week to trade at least. What day was this trade? Do you know what day this was?
Yeah, that was Friday in the morning. I was expecting a TGIF because we had just taken the weekly high.
Makes sense.
And I thought we would have a retracement. Everything else made sense. Makes sense.
All good there. All right. You have anything on this, Henry, before I go to the next one?
No, I think it's the same idea. When it's not playing out how you expect, totally good to mitigate risk. And then look, it looks like ultimately you did the right thing because you see a small move in the direction you expect, and then it starts to make the run that we saw it do this week.
I love the videos. I love the videos. Love the videos. If you guys want to do videos too, drop the videos in there. We'll definitely play them. Alrighty, Mr. Aiden. Concepts he used quarterly theory and inverted fair value gap, power of 3 in the 10 candle rule. E-mini S&P March contracts on the 17th of January, which would have been last Wednesday. On a 1 minute time frame, a 30-minute trade. 4 contracts, 1 to 2.5 risk to reward. 4:20 a.m. So we got a London trade in here, and then exited at 4:50 a.m. So about 30 minutes. Yeah, right here, 30 minutes. Liquidity taken, quarterly 2 consolidation, sell side liquidity. Draw on liquidity was the first quarter consolidation of equal highs. I'm assuming this is session quarters. He's breaking that session down into quarters. Stop placement was 2.5 handles below entry, 1 point below the London low. He took 1 partial and went break even at 435, and he was bullish. So here, I'll even open this first. So you can see in here, very bread and butter with regards to here. He's got these relative equal lows, right? That was kind of the idea of seeing some form of opposing liquidity taken. It is taken in here. He's waiting to see this SIBI trade through. We trade through. We create a BISI that lines up in the same area as the SIBI, but really using the SIBI as inversion. Very good entry, right? And then you can see he's tape reading it right here. He's got a BISI, just identifying the certain discount arrays that should play. You can see he doesn't need the full draw on liquidity to be taken. So as price is trading in and around these areas, he doesn't need it to fully trade through. He's still able to pay himself what he's supposed to pay himself, and his partials are perfectly fine, right? Paying yourself externally on that draw on liquidity is, to me, a point of preference. I'm even getting better at not letting it fully trade through the draw on liquidity and just still making sure I'm securing it. But you can see over here, his draw on liquidity is still traded through. Very easy, simple trade. Makes me want to trade London. If we're being honest, this was very easy, low resistance liquidity run. You can see he's got his quarters drawn out. Next trade, or you can see in here, this was him inside the trade. So he's kind of identifying throughout the trade, right? Getting in, very good entry. If you even looked at this as a BISI too, you could sit here and you could identify the consequent encroachment. If you even went lower than a 1 minute, you've got a breaker set up in here, right? Low, high, lower, low. In here, it takes the high with a 1 minute BISI and a city inverted. Lots of confluence in there. Very good stop loss placement. And then from there, you can see right there, this was his first trade of the year. Very good. Not bad, starting off on a good foot. No, I'll read the narrative. So the quarterly theory suggests that in each quarter, there will be a different stage of price delivery, just like daily session profiles. Consolidation in Asia, manipulation in London, and distribution in New York. Reversal or continuation in the PM of New York. Since price did not show a consolidation in the Q1 of London, I waited for Q2 to frame a consolidation to lay the foundation of the trade. As it did, I waited for the initial manipulation swing at Q3, which was delineated by the 3 o'clock to 4:30 a.m. segments. Once price had swept Q2 consolidation sell-side liquidity, I looked for discount PD arrays to be violated, which took form of an extreme discount fair value gap. Under the narrative of if we are posting a reversal after sweeping sell-side liquidity and leaning into Q3 of the distribution quarter, I anticipated price to start violating PD arrays. Once price has shown to displace above the first violated PD array, limit order was set on the high of the inverted fair value gap. Price taps into it by 1 point and quickly moves away. I think this is called an immediate rebalance. Correct me if I'm wrong. Unfortunately, I did not sit through price hitting my full take profit and manually close the trade, as price did not move above the premium PD array after 10 candles. I wasn't going to sit around and wait for 1.5 handles. I like that idea. That's something that me and Henry talked about a lot, right? He realized that it was 1.5 candles. It was not worth his time. We're trading to get our time back. If that's worth it to you, great. If not, yes, 1.5 handles. That's fine. You know, it's not a lot. Emotions before entry, none. I knew what to anticipate with price. Emotions after entry, institutional order flow entry drill, and price moving away quickly after being tagged boosted the confidence, as it should. Emotions after closing, none. I got what I came for, 5 handles. Any topics to touch on this, Henry?
No, great trade. That's not the immediate rebalance. The immediate rebalance is where it's like you're having a fair value gap, but the third candle comes back to touch the first candle's high.
I was going to say the immediate rebalance would be this candle coming all the way back to touch this, right?
Correct.
Yeah. So the immediate rebalance would have been just the very next price. Instead of creating the gap, the one that actually created the gap actually just comes out and rebalances right there.
Right. So no inefficiency is left behind. It's immediately rebalancing it instead of leaving inefficiency.
Good trade though.
But great entry.
Yeah.
Really nice. Sell side swept.
And I agree. You can see
inversion in the business.
You know, you can see as a trader, and I know we're all in different time frames of the world, but you can see it starts to get a little choppy in here. And it's like, if you got things to do or whatever the case is, why wait? You know, identify that 1.5 candles is not worth your time. And if it isn't, close your trade, take it, call it a day. So good stuff there. Good stuff there.
Nice, Aiden.
All righty. Mr. Emmy. Emotions, or actually right here, he said, I saw price had displaced lower, leaving no unfilled imbalance aside from the one I had entered on the 5 minute. Also, I was targeting a daily fair value gap below the 50% of the 20-day range and took a trade for a 1 to 2 price. Got to my target, but I didn't get filled and I wasn't available to lose the trade. I was patient and let price roll back. I didn't panic and waited to see price resume lower after it rebalanced to CIVI. Then I set my stop at break even and got stopped out sooner after. He's using a bearish fair value gap, and he's using the second stage of a market maker sell model included with that fair value gap. He's trading the European Open at 4 o'clock Eastern Standard Time. Trade duration was 4 hours and 20 minutes, 2.3% risk, trading at a 0.01. Target was 1 to 2, 10 pips stop loss, 21 pips big profit. Emotions, I didn't go into the market with the intention to just take any trades. I was looking for something specific before taking the trade. I was calm, and although price tested my patience, I passed the first time, but felt that price wouldn't retest the level I marked out again, so I braked even the trade. Price after or after the trade, I felt pleased to see how price could be fickle sometimes, and these trades lately are teaching me how to become confident in my analysis and not be afraid to take a loss. So yeah, I mean, you've got everything laid out for you. I think your stop loss is good. I think your entry protocol is good, and I think your draw on liquidity is good. I would say it looks like right here, right, trying to identify, yes, break even's good. You managed risk, you did all that, you never got a loss, but identifying that you know, this is where it gets tricky when you're trying to do these full pull trades, right? You're aiming for 21 pips, and it looks like it got very close to what you wanted it to get to and came all the way back and stopped you at break even, right? Price should not offer you, unless you are 100% committed to the fact, and if you are, great. If you're 100% committed to the fact of doing a full pull, that's fine, but not every trade should be a full pull. You want to get used to consistently, when price is giving you profit down here, or it's giving you profit down here, right? If price came all the way back up close to your entry, did not stop you out, and came all the way back lower, there should be no reason for you to not at least get something, right? Because now you're just, I know the idea of doing a full pull, but you don't have to always, you know, now you're trying to force being right too much, right? You're forcing it too much, and you want to always try to get a piece of something every single trade. That compounds significantly over time. So just know that, yes, if you're committed to the full pull, that's fine, but that should not be how you trade every single trade. You should allow yourself to take profit somewhere. If it's not in this leg, it should definitely be in this leg, without a doubt, because it's hard to sit through this. It's hard. You're wait. You know, think of all the time and mental capital that was used through this, and if you would have paid yourself, you would have felt better, and it would have been a lot more worthwhile. Just at least being able to sit through it and then getting stopped out. So that's something to just think about, and know that, you know, if you have a 21.6, what was it? 21.6 take profit, I would say either take partials or take your profit at 21. Whatever that take profit is, cut it just a little bit, just to have the idea that price might not get exactly to it. Happened to me like twice last year, where price got a tick or two away from my terminus, came all the way back. It happens. So what you think, you know, give yourself that room for error on your terminus and where you want price to trade. Give yourself a couple ticks below that, and try not to get that greed to settle in, and just know, okay, this is where I want price to trade, but this is where I'm going to take out price when it trades to that level. But good trade. I mean, all is there. The best thing that I can tell you is just, please try to pay yourself down here. Pay the trader. It always pays. It always pays, right? Even though you'll learn from it, and overall the bias was right, there's no reason to not potentially take some partials if you can down in here. And if you're trading with somewhere where you cannot take a partial, then definitely, as price is pushing in here, at least trail your stop a little bit, to where you're getting stopped out in profit on this price move higher. Henry, anything here?
I think that the trade itself is great. Yeah, the only thing is, as you get that close to your profit target, if there's a mental barrier of, I need to get this take profit, something you could do to help adjust past that is, however much you plan to take off at that take profit, as you get close to it, take half of that amount off, and then let's say here's where you want to take your profit. Here's where price is at. If you take half of it here and you take half of it here, you're still getting this as your average exit. So if you take half off and then it reverses, you took a partial. If you take half off and then it goes to here, you can still get your average exit by taking the other half off below your terminus. Does that make sense? It'll help you work past that mental barrier of needing to get it exactly to your to where your intended take profit is.
All righty. On to the next one. Mr. Singhese, we got on Tuesday around 1:30 p.m. I noticed NQ was looking to take the above buy side liquidity. It did not really take out the high, although we had a solid bar close above the old buy side liquidity. I then noticed a quick displacement down. There was a 1:20 p.m. CIVI at 129, the BISI that price has displaced to. So I took a short once it had passed both of them. I noticed price wanted to reach for the 1 p.m. sell side liquidity. So I took profit in that area. Just one contract, 25 handles on NQ, 14 minutes, 18 handles of risk, 25 handles and 25 and a quarter handles of reward. In the PM session, he's using an old high, CIVI, BISI, and old low. The draw on liquidity was the buy side liquidity. I believe you're talking about the sell side liquidity. It's okay. We all do that. I do it all the time, but I think the draw on liquidity for you is the sell side.
Thanks for the correction.
You're good. Emotions, I knew what I was looking for. So on the chart, it looked pretty clear. I knew I was supposed to wait for the 1:30 p.m. to take place, to place a trade within the PM session. So sitting on my hands allowed me to not gamble with the CIVIs and BISIs prior to 1:30. That's why it's timed and price. It definitely is there to protect you. Admittedly, though, I was a bit nervous that price after 1:30 really didn't clear the buy side liquidity, but the displacement downward gave me the confidence that I needed. Once price passed the inverse fair value gap, as a BISI, I knew it was going to continue. Work also affects my trading because I'm constantly answering phone calls and answering questions in the office. The distractions are what hinder my success as a trader, hence why I refrain from trading. I've noticed my environment forces me to place a trade that I normally wouldn't place had I had the proper environment. Not an excuse, but something I'm actively working on. I'm even planning on changing jobs. I'll touch on that too because I feel that, but I'll go into here. Very nice. I mean, very easy. You can see we take the buy side liquidity prior to right at actually 1:30. We take that. You can see we have a BISI and a CIVI waiting for that BISI to be invalidated and using the CIVI as it's supposed to. Very clear nested PD arrays. He's just giving the BISI, the inverted BISI, a little bit more room right there as a stop loss. And you can see he's utilizing this sell side liquidity. Price very easily. Doesn't look like it gave you too much of a hard time with regards to getting to where you wanted it to go. And he was able to take it. Good start to the account. Knocked out 0.5%. And it looked like it relatively went there pretty quickly. So very simple, easy bread and butter and good start to the account. I will touch on this though with regards to having a job and having an environment. It's hard. Especially when you work a day job, when you work an office job, and stuff like that. And, you know, obviously you can change jobs, but I think something that helped me was setting myself up for as much success, right? You never know when that phone can ring. You never know this, that, or the other. But really almost journaling, and every job is single different. But one thing that I started doing was like, okay, could I go into work a little bit early and get whatever I needed to done to at least take a little bit of the load off of my workday? And then with regards to what my day looked like, because I'm always in meetings and stuff like that. And so, you know, I look at where, you know, my meetings are throughout the week. For you, it might be actually journaling when that phone rings the most and start to get a data set of, okay, when am I getting the most amount of calls? Is there a pattern to when people are calling at certain times, certain days? And then shying away from that. And then sometimes it's a matter of if you're in a trade, and there's plenty of times when I'm at work and I'm doing stuff like this and I'm in a trade. If I'm in a trade, obviously my stop loss is in, obviously whatever the case is. And let's say I get a phone call or someone walks in my office and I've got to just look away from everything. That happens. Sometimes you have to just, for the sake of just getting out of the mud and getting out and through your job, you just got to let it play and you just can't pay attention. Maybe it's 5 minutes, 15 minutes, maybe for whatever reason, and it is what it is and it sucks. But sometimes you get caught up for 30 minutes or whatever the case is, and the trade just ends up, you know, either hitting your take profit or hitting your stop loss. And sometimes it's that set and forget, and it's not intentional, right? You want to be there, you want to be focused, but sometimes you can't. But as long as that stop loss is in, as long as that take profit's in, maybe if you can set, obviously, if you have one contract, it's really just the take profit, but you know, having partials in and stuff like that helps. But there are times where you're like, you know, maybe looking at a trade and you get sidetracked, and sometimes you got to just close the browser, let it do its thing, focus on what you need to for work, answer the phone call or whatever the case is. And it's just, that's just how do I want to say it? it's something that everybody has to deal with. Obviously, there's jobs that make it easier than others, but even when you're dealing with a job that kind of corresponds inside of trading hours, it's just part of it. I mean, it's just kind of it's just part of the tricks of getting out of it. It's just kind of one of those things where it sucks, and it's definitely not an excuse, but it just makes it a little bit harder, right? If we all had jobs that were not busy during the times where we want to trade, right? A lot of us would be getting out of our jobs quickly. But I think it's all the stuff in life that's worthwhile, there's going to be hard. It's going to be hard. It's going to be challenging. And I think just trying to figure out a blueprint, maybe it is a new job. Maybe it's not a new job, but maybe it's just trying to figure out how to potentially set yourself up inside your job during the day to not have as much stuff where, maybe, and I don't know how the job works, and, I can potentially help you outside of this stuff. You can reach out to me. You could describe kind of what your day job is and kind of what it looks like. But trying to get it to where there are days where I come in 2 hours early to work and kind of do the majority of my workday before work even starts. So when I'm at work in work hours, I'm actually focused on trading, and I can put certain things up and make it look like I'm working or whatever the case is, but really I already know that the majority of my stuff is done, and I can focus on that. So you kind of have to find a way to manipulate your job. Sometimes you got to be sneaky. Sometimes you can't, you got to do this, that, or the other. But there's always a solution to it. So I can work with you outside of this and help you, and we can kind of talk about what your day-to-day, week-to-week job looks like, and try to figure out ways to kind of go around it. And another thing is looking at that economic calendar, right? Knowing when those news events each week are, and really just trying to play to that. Okay, on Wednesday and Thursday and Friday of this week at 9:45, 8:30, and 8:30, right? At 9:45 on Wednesday, and at 8:30 on Thursday, and at 8:30 on Friday. If I could give myself 1 hour to 2 hours in and around those windows, whatever I have to do to give myself the most amount of time, least threshold on the side of what my work requires. I know that there's going to be phone calls that come in and stuff like that, but just trying to empty my pockets as much as I can prior to those. And if I could just get 1 to 2 hours at those sessions of the week, one of the three, right? It doesn't even have to be all three, one of the three. Just trying to find, maybe it's Wednesday and Wednesday comes and stuff starts hitting the fan and I can't focus. Okay, I'll try Thursday. Maybe Thursday comes and I'm hitting the fan. Okay, well, maybe now it's on Friday. And you just try to see what that gives you, what your job offer gives you that week and how busy it is. But we could talk outside of that. But overall, good trade. I mean, you definitely got what you needed out of it.
Thanks, Carson, for your input on that.
Yeah, not a problem. And you can reach out to me after, offline too, and we can work something out. I can help kind of start to hear it out and see if there's anything we can do to game plan to help you get through it. Other than that, that's really it for me. Henry, anything else on your end?
That's all from me too. Great job, everyone, this week. It was a bit of a tricky week in price action. We did see the higher time frame targets deliver. But great job with all the submissions. For those of you who are doing this for the first time or first time in a while, I think you're going to see a lot of growth through doing these training exercises week after week. I know we have a lot of people who can attest for their own growth through it, and I'm excited to see how y'all continue to progress.
I think someone raised their hand too, so feel free to come up if you raise your hand.
I didn't see who it was, but yeah, come on. I'm on the mic.
Sean? Is it Sean? If you raise your hand, feel free to come in. You can interrupt us. Not a problem. But yeah, I'll leave you guys with a couple things too before I leave. As I go throughout the weeks, I see things online and stuff that I read that's motivational and insightful. So there's 2 things that I'll read. If people treat you like an option, leave them like a choice. Yes, you are a nice person, but sometimes people cross the line too many times. They'll say that you've changed a lot, but a lot will change you. And before you judge me, make sure you're perfect. be careful who you trust. Salt and sugar look the same, right? So as you're going through your development, and you're going to have people that go against you, and people that want to see you do bad, and people that will only attach to the person you were, and the person you were is not the person you're going to be, and understand that and kind of assume that that's what's going to happen, right? And the ones that don't look at you any different than the person that you were to the person that you're going to become, and they're there for you no matter what, those are the ones you can stick to them. You can see that their character from the person you were to the person who you're trying to become, those people that they don't change how they treat you or how they respect you or whatever those cases, those are the people you want to attach to and kind of respond. But really, you know, this one also was really good too. Success is the only revenge, right? We all have certain areas in life where we want to seek revenge, whether it's people, whether it's jobs, whatever the case is, we're always constantly wanting to seek revenge. And the only thing that you can do is win so big that all of them compare themselves to you constantly, and that you'll literally forget that they exist. It's not the best revenge. It is literally the only revenge. Everything else is petty, and everything else you do will show that you were thinking about them all day long, which means that they will win by default. All you can do is think about your goal and win it. And when do you win? That's when you become so big that they shrink to an irrelevancy. You end up casting a shadow so big that nobody else can see them behind you, right? That's the only revenge. That's the only thing you can do to win, whether it's an ex-boyfriend, an ex-girlfriend, a job, a boss, a friend, an ex-best friend, all these people that come into your life that are either there temporarily and want to try to drag you down and keep you at the level that you're at. Because if you go and exceed wherever you're at right now, you're going to be a constant reflection that they didn't go after whatever it is they were looking for or they tried to do, that they gave up on their dreams. And so the only way you can get back at these people who try to drag you down is win so big that they constantly are having to remind themselves that you went and you did it, and you went through whatever pain you had to endure to get to an area that you're at right now. So take those with you as you go throughout the weeks. You know, I love my group of friends, but I'm doing 75 hard right now, and my friends love the drink. They love to drink. They love, you know, they're big, you know, having a beer with the boys type of mentality, and they have absolutely hated the fact that I have gone through the 75 hard because I can't have a beer with the boys. And I think that over time, it kind of opened my eyes to the fact of they have not once said anything encouraging to me. They have not once tried to, you know, not make it apparent that all they've done is just sit here and try to get me to go away from where I'm trying to go. They've tried to knock me off my goals. They've tried to create an area and an environment where it's hard to resist. They have not made it easy at all. And I've had friends that have been encouraging, and I've had friends that have, you know, sat there, and I'm doing 75 hard with 4 other of my friends. And those have been the people that have actually sat there and helped me through it. Not the ones that are sitting there trying to get me to go off the path that I'm trying to go on to. I will end it here too and say that we do have big things in the making right now. I'm not going to speak a whole lot on it, as I will get slapped by Henry. But if I can give one little hint, just note that the way that firsthand goes day to day and all that good stuff, the way that you utilize firsthand is not the way you will utilize firsthand in the future. And just know that we have a bunch of things in the comings and in the next couple of weeks. The way that you guys see firsthand and the way that you guys interacted firsthand will be completely different, and it will benefit all of you guys. We've got something coming in the works that I think is super cool, and I think that will benefit every single one of you guys. It will have us be a lot more connected as a community. You guys will have a lot more, let's say, reach into myself and Henry's life. You guys will have a lot more access and a lot more accessibility to all of the things that we are kind of creating as a community. The community as a whole will kind of be a little bit different, but in a good way. And I think that a lot of you guys will like it. And we are a couple of weeks out on that. So just stay tuned, and you guys will definitely be hearing from myself and Henry personally once we get to a point where we can reach out and kind of show you. But other than that, I won't say anything else. Just keep doing what you're doing. Stay active on the calls. We take note of everyone who joins the calls and is active in the community. And I tell you, there are rewards coming on the other side of that as well. So happy Sunday. Hopefully you guys had an insightful call this week. This was a really good call. Love the participation, both on the side of asking questions in the chat, but then also in the training exercises as well. Hopefully it's not too cold where you guys are. I know if it's starting to get a little cold in Florida, I know it's definitely somewhere cold wherever you guys are. But Sean, I think it's Sean. If you have your hand raised, for sure. I don't know if you're accidentally doing it or if you have something to say, you can come on. But that's
Hi guys, how's it? I'm from South Africa. I don't know if you can hear me.
I can.
Oh, great. First time here. I've been following you guys for a while now. I'll still have to start doing the trade exercises. I just want to find out. I'm trying to find out what, with the prop firms. I've been doing a FTMO demo challenge for a while now. What prop firms do you guys actually recommend? Because there's another one that's similar to FTMO is, what's it, Funded Next. It's very similar layout.
Yeah. So what are you looking at? Are you trading equities? Are you trading indices?
Well, I've been doing the micros.
Okay.
I had a live account on AMP Global Europe, but they've closed down now recently. Basically, I've been testing the waters with FTMO because it's a once-off payment and you get your money back if you pass the challenge.
Okay.
So,
I would say, FTMO is very good. I've had funded accounts with FTMO. I think FTMO is very solid, and I've never really had problems with them until recently. With regards to me being in the U.S., they have stopped or at least suspended their activity with U.S. traders. But from what I've heard so far, and I have not traded live yet, but if you've already had accounts with them, which I do, you're fine. They're just not offering U.S. clients. But I've had no problems with FTMO in the past. I've not had any problems with customer service or getting payouts or anything like that. I would also look into TopStep. TopStep is so far been very solid, and something that another funded account that I can't really speak for because I haven't had anything from them yet. And I haven't had any experience, but one that I'm going to actually potentially go out and look is also My Funded Futures. My Funded Futures is one that I've seen, and I'm going to go ahead and try. But really, with regards to funded accounts, the only two that I've kind of been in joint with are TopStep and FTMO. And I can say, through trading FTMO for years, I've had no problems with FTMO, and I am still relatively new in the TopStep kind of environment, but I do like TopStep a lot because it has gotten me away from MetaTrader, and I have had lots of success actually trading through the integrated trading view that they offer. So for my sake, that's kind of the two that I look at, and the two that I utilize. One that I'm going to try out that I haven't used yet is My Funded Futures. Henry, you can talk on yours as well.
Yeah. I've used a couple different ones. I've used TopStep and Elite Trader and Bespoke. Those are I've tried some other ones too, but those are the ones that I've taken payouts from. So I don't really want to speak to any that I haven't actually gotten paid from yet. But I haven't had any issues with those three.
okay.
But make sure to do your research, look at their reviews and that kind of thing. I know there are some that have made things challenging for traders to get payouts, or who have canceled accounts for various trading styles and methods and that kind of thing. So there's not a whole lot of certainty with some of them. So just make sure you're doing your research.
Yeah, and I'd say the biggest thing too is just with regards to doing research, right? Look at reviews. Do they have Trustpilot reviews? Look at YouTubers, go on Twitter, social media, look and see what people are saying about them. I think that's the best thing. The good thing is that there's so many out there, but I think that can sometimes hurt people. Stay within the bigger ones. I think you're in good hands, obviously, with FTMO, and just, whether it's YouTube videos or looking and seeing, and I wouldn't necessarily trust always reviews that are on their website, right? Because they could potentially kind of manipulate that. So when I say look at reviews on third-party websites or third-party social medias, to where it's not just them giving you reviews, it's what other people are saying, not just on their website.
I've been following Paladin. He's released the video this week, I think. Also trading like a million rands or dollars of prop firm money. So he started a video this week. He was with FTMO and one of the others, two of the other guys. Yeah. One other question. What are you guys trading? What's your favorite? Because you guys are America, correct? You so you're obviously doing NASDAQ. So my equivalent on FTMO is US 100, correct?
Yes, the CFD. I would stick with it. Yeah.
And then tell me, do you guys trade the euro and the GDP, the British?
I traded it for years. I traded the pound and the euro for years. Since I had moved about 2.5 years ago back to indices, I haven't traded it as much, but we do have traders that trade that in the community. And with what we're going to release in the next couple weeks, we're going to have, it's going to be a lot easier for you to access those traders. And, I think get into, a smaller group of traders that trade what you like to trade, whether it's euro or pound, and kind of get an insight from experienced traders that trade it, but then also maybe people that aren't as experienced, and kind of see where they're at and see if there's anything within their inexperience that might be able to help you. Because as experienced traders can help you, inexperienced traders can help you also. We have a big enough community, and I can kind of sort your way through it. If you, I can take a note and reach out to you and tell you kind of some individuals in the community that trade the euro and pound also. And if it's something that you're very key and you like to trade on it, let us know, and we can actually cover that in our analysis on our week to week also. If you want, we can go over, on our midweek reviews. It takes us 5 minutes to go over whether it's euro, pound, or whatever the case is, euro or pound. And also, if it's something that you're looking at and you want to know what our insight is, even though we might not trade it personally, if you want to see our insight on it, and this goes with anybody on any charts, if you guys want to see something or have us take a look at something, let us know, and we would love to take a look at it. It does not take more than 5 minutes for us to at least give you our opinion on what we might see happen.
Okay, thank you very much. At the moment, I'm sticking to US 100.
Good.
So I can follow you guys on the NASDAQ.
Yeah.
It's very similar, I see.
Yeah.
And thank you very much. Great show.
Not a problem. Thank you. Sarah, is there a post about prop firms, pros and cons, or people experience with them? There's really nothing in there yet, but there will probably we've got some stuff in the works that potentially will have at least an area where people can go and put their own due diligence in on how they have been able to receive pros and cons out of whatever prop firms they deal with. We'll make sure to incorporate that in the things that we have coming out in the next couple of weeks also. Might be fun to have a prop firm challenge for a group of members trying to pass. Yes, we have talked about that. Yes. Yeah, we definitely have an idea in the works with potentially collectively all of us trying to pass a prop firm challenge also. So we have been thinking about that, and I think that there is something in the works where we all kind of collectively try to together pass a prop firm challenge. So keep that in the back of your guys' mind too. That's something that we've got in the works coming soon.
We'll have some fun stuff going on.
It's only January. Don't worry. We got a lot of stuff. We got a lot of stuff planned. We got a lot of things coming in the works in the next couple of weeks. And as the market starts to loosen up a little bit, we've got a lot of fun things and a lot of opportunities for a lot of you guys to make a lot of money. But other than that, that's it for me. Appreciate each and every one of you guys that stuck through the whole entire thing. And for the ones that are away that can't join these calls that actually do watch the recordings, I do appreciate you guys also. And good luck and good trading this week.
That's what's up. All right, take care,
All
everyone.
good.
We'll
Stay
see
safe.
you on Wednesday for midweek review. Take care.
Peace.